So, hello and good morning there. As you can see here, we're only three because our colleague Gilles from Kraken could not make it. You probably have heard of it. We had some issues with flying from Germany to Barcelona. I myself am also from Germany. I'm from Frankfurt, so I had the luck that I didn't had to cancel my flight. But Gilles from Kraken could unfortunately not come here. So I can ask questions not to him, but I can at least answer maybe on his behalf because I have some insights which I can share with you how Kraken is entering the European market right now. So as I already started talking, so I'm Alireza, I'm the moderator of this panel. I'm a German-based lawyer. Some of you know me, others don't. I'm here already for the third or fourth time. And I have the pleasure today to talk to gentlemen next to me who will introduce themselves. We're going to talk about product fit, and why it is so slow. I can tell you right now, I don't think it's slow, but let's talk about this. And I will give over to you, Yaël, and please introduce yourself.
All right, thank you so much. So my name is Yaël Ossowski, Deputy Director at the Consumer Choice Center. We're a consumer advocacy group. I normally work on policy, lobbying, writing legislation, talking to legislators, and I'm also a visiting fellow at the Bitcoin Policy Institute in the US. So I've worked a lot on Bitcoin policies at US state level, European level, and international. Seen a lot of these products come and go, companies come and go, and always trying to stand up for the consumer who actually uses this stuff and wants to empower their own lives.
Hi everyone, I'm Vugar. I'm the Chief Operating Officer at Bitget. We are a centralized exchange with more than 45 million customers, facilitating $10 billion transactions. And we also have decentralized wallet, which is Bitget wallet. It also has around 25 million users and facilitate around $10 billion transactions. Compared to these two gentlemen, I'm not a lawyer, I'm an economist, but I'm here happy to challenge on the topic of is the adoption fast or slow?
Thank you. I'm happy that we don't have too many lawyers because lawyers seems to be boring. And that's why we have you. And unfortunately, Gilles couldn't make it. He's also a non-lawyer. So when we talk about products, crypto products, you all know it. We have cryptocurrencies, we have security token, we have real-world assets tokenization. On a horizon, I would rather say, there is at least one exchange, one European exchange, which is going to list very shortly, an Austrian exchange, very shortly, a coin which is connected to a real-world asset. Others may follow. But what else do we have? What is there? Maybe starting with Bitget, because I know, Bitget, I would say you're rather a hidden champion. Not that many in Europe know you, even though you have a cooperation agreement with Juventus and with the Football Club of Antwerp.
And also, we just signed La Liga, Spanish Premier League.
Great.
Yes, we are sponsoring all teams in Spanish Premier League.
So probably then in Germany you're still missing. But I know for a fact that you have a couple of products which are interesting, which are not that, not that common, I would say, for typical exchanges. Maybe you evaluate a little bit on that.
I think when we talk about products, there's two levels. One, as you mentioned, real-world assets, tokenization, decentralized infrastructure. All these projects we just list as an exchange to be able to trade. But when it comes on a product level that users actually interact, or retail users mainly interact, or institutional users mainly interact, then it becomes typically complicated. For example, in Europe, after the new rules and laws, you'll be not able to... You will need to get a different license for derivative trades or the spot market trade, which is a different product. But also there are other products that are beyond trading, because whenever you talk about crypto, it was always this narrative: you invest $100, you become a millionaire over the night. Some token becomes, pumps up super fast. But we need to move beyond that. And as I mentioned on the backstage, for us, it's more interesting not only how people earn, but how they're going to spend it and how they can earn beyond that trading. For example, we recently launched several earn products where you can let's say, put your tokens on a hold, the similar way traditional banks do, either exchange for the same token like a staking works, but also you can change to the new project tokens. Whether if you have Bitcoin, Ethereum, USDT that you are not planning to touch in next week or 10 days, you can lock it up to get new project tokens. And this way you are able to risk-free earn more tokens, and you can discover the new gems and new tokens. Also, as a centralized exchange, we usually say when tokens end up in centralized exchange. They no more do 10x or 20x. Therefore, we have pre-market product. You can start investing into the startups in a guarantee that they will come and be listed on the market. Therefore, product opportunities are there, and there are too many of them. Also, we recently launched a Bitget card where you can transact based on a Visa and Mastercard infrastructure without building our own infrastructure. Therefore, when we talk about the product, we should kind of divide it in what kind of a product are we talking. Are we talking about institutional facing, which is a whole new industry?
Yes, you said something very interesting. You said you have a Mastercard-backed crypto payment card, which I think is very interesting for two reasons. One reason is looking at the regulation in Europe, the markets and crypto assets regulation, which actually, I would say, not really enforces, but at least gives the way for stable coins, e-money token, asset reference token. And we also heard that the European Central Bank is not going to issue CBDC, retail CBDC on the blockchain. I think this paves the way for payment products which could be like introduced with MasterCard. But we also heard it of Ferrari. Ferrari in Europe, they are accepting payments in crypto, and you don't need it to do it with your MasterCard. And with this said, looking over to you, Yaël, you're like now living in Austria, and you also have the consumer focus. What do you really say? What is right now, maybe this year, maybe next year, the product which a retail or consumer needs? Is it like an investment asset? Is it like a security token, like a real-world asset token, like Steelcoin or something in that direction? Or would you say, as we see it in Germany with Trade Republic and others, the payment product is something which the people right now need?
I mean, what do people need? It's interesting. I got into this as a journalist in 2013 for ideological reasons. I thought Bitcoin was the greatest thing that had happened. It was a complete meshing of philosophical ideas, of economics and technology. And I thought it was great. And over the years, it's been sometimes heartening, but sometimes saddening to see how that has led. There have been many pumps and dumps, many different scams, many different projects that have burned and failed, a lot of very good entrepreneurs who've tried very hard. But if I just look at my day to day, so I got my haircut 2-3 weeks ago in Vienna. My barber accepts Bitcoin. So I send him a Bitcoin payment. He takes that, puts that in his self-custodied wallet, and maybe he sends it to his family in Iran or elsewhere. Maybe he uses it to go to the store, whatever it might be. There are also bars and restaurants where I'm able to use Bitcoin. I just renewed an AI subscription. There's Venice.ai. It's a great product. I paid with Bitcoin for that. There are servers that I run. I'm using Bitcoin. I think there's a lot of different products that exist, and there's a lot of focus on these sort of different uses that are more B2B that I think consumers are just not interested in. We want to have good UX, we want to have good self-custody, and we want to have the ability to own our cryptocurrency, to actually own it. And I think that's something that is not emphasized enough. The reason why Bitcoin and its crypto offspring is a revolution is because it's sovereign money. You can own it. It cannot be seized by the bank. It cannot be seized by legal order. If you had your seed phrase, you are protected. You have that. You can carry it across borders. So I would love to see a lot more of that consumer-facing, good UX, good apps, and also for merchants, because that's the other part is, you know, I look at an app called BTC Map here in Barcelona. Where can I spend my Bitcoin? Next to nil. There's a couple businesses, maybe a guy who sells CBD. Maybe I can use it there. That's about it. Where are all the other businesses? It should be part of the ordinary payment mechanism that every company offers. So I think it's incumbent upon merchants and also the entrepreneurs who are in this room or elsewhere to offer those tools to merchants so they can make it easy. Make a payment system that's right there on the spot, not some guy in the back who might have a wallet on his phone. Integrate it into the business because I want to use it. I believe it's a sovereign money. It's a transportable money. I don't have to go to the ATM. I don't have to give everyone my documents. It's something that we can use. I'd love to see a lot more of that.
Can I challenge you on that? Because I was thinking about this a lot. And now, because it happened to me, now your barber knows your wallet and he knows how much you earn and where you spend it, and everyone else. And imagine you want to travel.
I use Lightning, so no, he didn't.
You want to travel, you want to do banking because it happens a lot, right? It's all traceable. And I think with the current technology, we are not fully there to have it like as an independent payment service. And I think that's one of the great things when you build on an existing system, that you still get the privacy of the bank transfers, and it's very important. And I think more and more technology should be developed to make it viable and more private. At least you should not only have a fully custody, but you should also have the right of your information. And I think that's one of the biggest issues.
I agree, and I fought for that, and I've pushed back against regulations that aim to do that in the U.S., Canada, or in Europe. I'd also invite you to my GitHub page. I got plenty of different projects that I forked to people who are working on this. There's all kinds of great protocols, different apps, different wallets, things that are getting launched by open source developers all the time that are really exciting, and I love to see that. I think the privacy aspect, financial privacy, is a very important deal. We should definitely focus a lot more on that. Whole other conversation, but I do think being able to use good, sexy products and merchants really being willing to step up and say, hey, we'll accept this. It's the most fungible asset ever. We can convert this however we want, send it around the world, pay whomever, pay our lawyer if we want to. I think that's a good thing.
I mean, I like your idea, and I know where you're going to with the peer-to-peer payment. And I myself think that payment with crypto is important, and it's coming. But what we see right now, and you see different service providers, at least in Europe, I think also outside of Europe, I saw it also in the Middle East, like Naka, or also known as Go to Crypto or Go Crypto, which have built up the Plane B in Lugano in Switzerland, and also now in Europe doing a lot with Obit and others who you have seen probably on LinkedIn, where you can go with your Obit or with your Naka or let's say Nimic or whatever card, and you pay the merchant, but it's not a peer-to-peer payment. What really happens in the back is that you take your crypto asset, even if you want to take Bitcoin, it is getting swapped in the back by a market maker to stable. At the end of the day, it's getting then again swapped to fiat, and the merchant is getting fiat on its account. And I think that 99% of the merchants, they don't really care what to get in the end of the day. They're happy if they don't have to pay that much fees, that they get the money guaranteed on their account, don't have any tax or other issues. And therefore, I think this is the way forward with this model which Naka has built up. And if you follow the market, you know that the Tether Foundation has put in a big stake into Naka, and Naka is now using the Tether USD for their swaps. Many thought, okay, Tether has left the European market. No, it's the opposite. They do it in a different way, in a legally compliant way, in entering the European market. And now I'm coming to my point. So, I mean, look at products. We're now talking about payment products. And I think it's very difficult to elaborate on what a crypto product in the end of the day is. To make an example also for the audience, what is Bitcoin in your opinion? Is Bitcoin, as a white paper says, a peer-to-peer payment instrument? Or is it rather what I would say, I would never pay with my Bitcoin, an investment asset which you keep and, I don't know, maybe at some point swap it, maybe at some point cash out? What do you say?
What do I say? I think it is the same that happened with gold. I don't know, 200 years, 100 years, it was a payment, peer-to-peer payment. But today it is more of a investment asset and more of a, exist in different forms rather than actual. Therefore, I think Bitcoin is going there. But all the other crypto tokens, especially the stable coins, I think are the one for the peer-to-peer payment, because especially I think Bitcoin is like really expensive to do a day-to-day transaction because of the transaction fee, unless you are doing some large transactions. Therefore, I'm not sure, but I believe it's more of an investment asset, and I never spend my Bitcoin either.
Well, we have plenty of liquidity on Lightning, which is Bitcoin's second layer, fees minimal. Again, for me, Bitcoin is a decentralized, censorship-proof way that we can actually value assets, and it's a protocol that is essentially representing the separation of money and state. And this is why it's very difficult usually to talk about this in developed countries, in the US or in the EU, is our payments are pretty good. Everyone's got a Visa card, they use PayPass, they're able to just tap it. Now in London or you go to Amsterdam, you can just go on the bus and tap your card and you got your ticket, all is good. But the problem is the money that's underlying that, the US dollar, the euro. There are so many political and financial crises that await us that are always there. We've already seen it in Lebanon. We see it in Turkey. There's all these different currencies, and that's why people are moving to stable coins or alternatives like Bitcoin. So it's very difficult because we do need to segment our message. People in developed countries, you can't make the payment fee argument too much because we're talking about small percentages. People outside developed world know very much what it means to have bad money, inflating money, to have money that can be confiscated or like in India with this black money all of a sudden taken off the street. So it's sort of a dual argument. There's the human rights, financial sovereignty argument that we need to have in many developing countries. And then we just need to have also a sovereign money approach in our countries as well, in developed ones. Because at the end of the day, do I want to put all of my retirement, my assets, what I'll give to my kids one day at the stake of whatever the US government says the dollar will be or whatever the European central bank is going to say the euro is going to be? I don't think so. And I don't think the trends have been very good. I'm a pessimist on fiat money. That's why I'm into Bitcoin and cryptocurrency.
So I want to talk about the elephant in the room, which is regulation. When we talk about regulation, most probably of the developers and those who are into crypto would say regulation is a showstopper. So regulation is killing the crypto business. So when we look from a more abstract way on regulation, not just in Europe, also the US, in Asia, maybe India, Russia. I mean, you have also experience with India. Would you say that regulation is a showstopper, or how do you see regulation?
I think when you use the word of regulation, it's definitely regulating something. It means it kills the creativity and puts a boundary. If we put another term like a compliance, it makes a much more better acceptance. As a centralized crypto exchange, we are very keen on compliance and being compliant. And since I took over last 1 year, I hired around like 15 people on our compliance team, because it's very important, especially if you want to enter to market or exist in the market. We've been regulated with the VASP, and now we are looking into micro regulations. But also when we look at Europe, it's not only killing the centralized like a white paper examples, but it also introduces non-KYC transfers above 3,000 euros will not be possible even on centralized exchanges and so on, which is, in my opinion, very absurd, because compliance is very expensive and you don't have so many lawyers and professionals that who can actually come and do reality check. And I've been talking to Turkish government recently. They also introduced a regulation, and they don't have enough lawyers even go through the regulatory applications. They don't have enough judges. If you go and do, I don't know, a court case, how they're gonna took this process, and that's one of the biggest problems and processes that countries should go through. They need to educate your legislators on the matter. Therefore, in my opinion, it will kill the creativity. It will kill a lot of startups, because as a startup, you don't have enough money to hire 3 or 4 compliance person, which is almost the minimum requirement you should get. And on the other end, you have, for example, Middle East example, where things are much clear, things protecting both the startup and the end user, but much in a very, very easy way, rather than having this MiCA. And with MiCA, my biggest problem is that I'm sure we all know what happened with GDPR. Now we end up with a mobile phones where half of the screen is blacked out. We just accept whatever we accept without knowing what is going on. And that's it, right? I think it will become the next GDPR, where we will be accepting blindly without understanding or reading that 100 paper what our rights say, and probably what we're going to do, not use any service, because now they have terms and conditions.
Absolutely. I mean, from an Austrian perspective, and also your experience outside of Austria, would you confirm that? I mean, I'm fully with you with the GDPR thing. I think as it's now applied, it's nonsense. But what would you say also from a consumer protection view? Would you say that we need this kind of regulation? Is it risk-based approach as you have it right now?
So when I was writing about some of the crypto exchanges in the US in 2022, we had already seen a lot of people who were questioning liquidity on things like FTX. And I was writing about it at the time and could kind of understand, to see the money trail, what was happening, some of the people on the boards, the amount that SBF was present almost at every conference and event, and then meeting with Bill Clinton and all of these people. It's like, man, there's some money that's sloshing around, something a bit crazy somewhere. And in the end, when it went bust and we finally understand what's happening, and now SBF will be sharing a jail cell with P. Diddy, by the way, I just read that. But what we have now is the system to where many different regulators are saying, we're going to protect the consumers, and here's how we're going to do it. I think there are simple ways to do it. You should not have institutions gambling with customer money. Very easy. In the U.S., we can't really talk about that because we got rid of Glass-Steagall in the 1990s, so we don't even have that for the private investing side. So I do think we haven't really helped consumers there. There are private initiatives. There are proof of reserves that I know that some companies and exchanges have taken on so that consumers are more aware. I think we need a lot more of that. Because if you're going to be selling crypto tokens, cryptocurrencies to the public, you should at least have reasonable disclosures. Not that we need to see your entire treasury, how much you get paid, how much you pay your employees, but do you have what you have on the books? If anyone has been following BlackRock's ETF, they have this custody agreement with Coinbase, and they amended their agreement just recently in the last week to say, hey, we want proof that you actually have the coins that we're offering our consumers. We want proof on chain that you actually have these in your custody. That, I think, does more for consumer protection than anything Elizabeth Warren or anyone else could ever invent from some Senate office or bureau. So I think that is really what innovators should really put all their efforts into creating. Offer those tools. It's, again, an innovative solution, not one that'll necessarily come from government. I'm generally pessimistic on most of the rules. I think MiCA is the ugliest thing in the room, but it's something that we can identify, we can work with, and many companies will be paying many lawyers and compliance officers to figure it out. That's kind of what we have to do for now. I hope we can evolve beyond that to really allow entrepreneurs to actually offer those products to consumers. But again, it's incumbent as well upon innovators to come up with good solutions so that the regulators don't have to come in after the fact and try to crack everything open.
Honestly, I'm truly pessimistic about government regulation and protecting the users. We saw how banks collapse in US. We saw what happened in Greece during the recession. Banks stopped just paying people and no one said anything. While, for example, as a centralized exchange, every month we put our proof of reserves document with all the wallets showing what we have. And also we have user protection fund, which is 6,500 Bitcoins available on chain. You can just go check, make sure that it's on that wallet. Therefore, I think when we talk about liquidity and having assets, it's the easiest way to control or check if they really exist or not, rather than the central bank, do they even have that money or not? Or do they have that reserves or not? And the problem with digital assets are very easy to control, but all these gold ETFs and silver ETFs, because you have usually the custodians, and they also can resell because they only have to hold 10% of it. The same with the US dollar-based assets. You need only have around 10% of it in order to send 100%. Therefore, I think banks are much dangerous and they have less liquidity. As a crypto exchange, you have to have 100% liquidity. We can't tell you we have 10 Bitcoins, but we are selling 100 Bitcoins, right? But central banks or all central bank licensed banks do that.
One other thing I wanted to add is we have custodial tools and non-custodial tools. I think we need to have legal clarity that non-custodial tools should never, ever have to follow the same rules as custodial institutions. That is code, and code is speech. And when we have situations like people who are developing wallets anonymously, offering non-custodial solutions, who then are dinged by government officers saying that they broke some state money transmission rule, as is happening with Samurai Wallet. These are the things that do chill innovation. And we need to have clarity. People need to understand the difference between custodial solutions and non-custodial solutions. Self-custody is the innovation that came to cryptocurrencies and Bitcoin, and that has to be protected by law. It has to be understood. As far as I understand, the fathers of MiCA, the people who discussed it in the European Union, they understand that. There have been exemptions for self-custody. We need to have much more of that. We need to have much more articulation on it, particularly from international authorities, because I think that is where we'll actually gain the freedom that Bitcoin and crypto have promised us. And we're not going to be, bogged down with different things of compliance if you're just using code to send transactions back and forth.
That was the signal for me to take off my jacket because, as you just said, non-custodial is also very important, non-custodial products. I want also to challenge a little bit the exchanges. I think exchanges are very, very essential, very needed. But as you just said, non-custodial product, I think are as much needed. You have crypto investors who are more sophisticated, who are more into the business. Why shouldn't they have products or access to the DeFi industry, to the DEX industry? Would you say in the future there is a possibility that SEX and the DEX are cooperating, working together? Is there something in view? Could you say that?
Could I say that? Maybe. Shall I say that? Not, because when we talk about the centralized world, it's pretty complicated. It's very hard for institutions to get in. And also, as a centralized exchange, for example, if you are buying a Bitcoin from us, it means we have KYC and AML. We can have a full trace of where they come from. If you buy a Bitcoin from a decentralized exchange, and what if it is coming from a stained wallet? Some scammer did something, and as an institution, next day, I don't know, the authority will come and tell you, give that Bitcoins back. They are stained. They got through scamming someone, and you have to give them back. Therefore, as an institution or large client, you preferably would want to work with a centralized exchange because of that, all the process. But in parallel, if you are you have a big risk appetite, or you want to go work with a decentralized exchange, because for example, Bitget, we have decentralized wallet where we have 20,000 tokens, and in Bitget centralized exchange, we have only 800 tokens. And usually early stage investors, people who are more into taking risks and investing in very early stage products, they prefer going to the DEXs, Uniswap, and all the others. While if you are more into traditional way of trading, or maybe crypto is like 5-10% of your portfolio, you definitely come to the centralized exchange. Can you swap between? Definitely, but also not all centralized exchanges are able to accept all sorts of different products and chains. I see your shirt, and I know you are leading that question there. Therefore, centralized exchange are playing a different role than decentralized exchanges. Another important way, even today, let's say you have USDT on Ethereum, but you want to do transaction on Tether, or I don't know, Solana, you need to come to the centralized exchange one way or another, because you need to swap them. And unfortunately, there isn't much product to do that multi-chain swap. And I'm just talking in the same currency in different changes. But like, if you want to do anything else, definitely you, one way or another, have to come across.
I mean, we're absolutely on the same page. I think we all agree that a certain amount of KYC, AML, CFT is needed. None of us wants what happened to Alexei, freedom to Alexei, happening to any other protocol developer and so on. But I think, in my opinion, that there is the future of combining these two worlds, the DEX and the SEX industry. I think this is what consumers need. They need to have the freedom of choice what they want to do without a non-risk balanced regulation. I'm absolutely with you that the rules we have for custodial services should not apply to non-custodial services, especially what we have on transfer of funds regulation and travel rule and stuff like that, which is most of it is nonsense. But I think from the consumer protection, and as you said with the GDPR, all these clicks, they're nonsense. If you would have thought like back in FTX times, SBF times, every investor who has a little bit of understanding, can read between the lines, would have seen that there's something wrong. Yeah. And in the end of the day, you have to give the freedom of choice to an adult person to do what they want to do and protect them from scammers. That's it. Full stop. But
Yeah.
what do you say?
And there has to be a lot more education, because again, if you have scammers that are out on the prowl and they're attacking exchanges, it doesn't matter if you hold your own keys and you run your own node. You're completely separated from that. You are not at risk. And I think that's a lot more on educators who are in the crypto space to continue to harp on. And I understand that there are a lot of great custodial solutions. There's a lot of great code that people have developed that allow people to custody things at certain places. But look, you're not going to be protected. If you're giving your coins to someone else, that's a risk. We do it with the banks. We understand that there's government protection and up to however many million euros or thousands of dollars. But the reason that you are into cryptocurrency, or you should be into cryptocurrency, is because you can own it sovereignly. And I think there has to be a lot more on education as well so that people understand this. We understand not every grandma or Oma in the world is going to own some of these wallets, but that's why we have Uncle Jim models, and we have ways that we can do it in the family. And there are great innovations I've heard about just here where people can hold things in their family or with loved ones or with trusted lawyers. So I like that.
But also, like, I think banks were around for so many years and scammers were around so many years, and government failed to even prevent basics like a phishing method and so on. Therefore, it's more about education and more about educating people how to find a good project to invest, I don't know, good token to buy, and diversify their portfolio rather than focusing on solely like to product and developer. You shouldn't put all the risk on a developer.
Thank you. I think these are nice end words. We need great products, nice user experience, and education. I think that's the key, and a little bit less regulation. Thank you for being with us, and have a nice day.
Thank you.